Welcome back to Growing Your Savings Using Blue Chip Stocks. Today is April 25th. Prices were updated last Friday. Last week turned out to be one of the worst performing weeks in 2022. There were quite a bit of sell offs happening directly connected with the interest rate hikes in both Canada and the US. We're going to check in with our listing of Canadian stocks on the TSX and our US stocks on the New York Stock Exchange and the NASDAQ, as well as my 4 fantasy TSX portfolios to see how they're doing. The resource and utilities sectors are still doing quite well. However, finance is struggling. Our $5,000 portfolio is off a bit at a 4% gain on the year. This is down from 6% last week. Our $10,000 portfolio is also down to a 5% gain, lower than the 7% it showed last week. Our $25,000 portfolio is up 3%, which is a drop from the 9% that it gained last week. And our $100,000 portfolio has actually now lost 1% since the beginning of the year. Last week is a picture of how there will be bad weeks, but we will hang in there and we will watch the market rise again. Remember that you're in this to grow your savings and your stocks are paying dividends. Blue chip stocks are a slow and steady growth. You aren't going to get rich overnight, but the earlier you start investing, the more you will gain in the long run. So, things to remember: the prices on the stock market will go up and down with the economy and world events. With blue chip stocks, the dividends are fairly secure. They will pay out at the same rate no matter the value of the stock. Dividends can be used to buy more stock, and dividing your money evenly into each of the 5 sectors shown will create a stable portfolio. When one commodity goes down, others tend to go up. When the market takes a tumble, which is what it did last week, this is when you want to buy. When the stocks are low, you know you've got a good company, this is when you want to get in. You buy low, sell high. So either add cash or reinvest your dividends. And as always, this is for information purposes only, and I take no responsibility for any gains or losses you experience in the market. So let's take a look at our Canadian portfolio. We are showing the manufacturing and industry sector is a little bit more on the red side. We're actually down an average of 10%. We do have some gains in here, but we've got some pretty good losses as well. In the consumer goods, it's about a 50-50 split, and that's reflected right here. We've got an average of 0%. So 0% gain on the year overall. So finance is still showing all losses. We're getting a little bit more past 10% in some of them, but we're still showing an average of 8% overall. So finance will also come up. These are all strong banks and financial institutions. Cons- um, Resources and commodities still solidly in the green. We're down a little bit from last week, but we've still got some really strong gains overall. Same with utilities, solidly in the green in the Canadian sector. So our Canadian market is only down minus 1% overall. The US side, a little bit more instability over there. Manufacturing and industry, it reflects what you see in the Canadian market. We've got more pink than we do green, but we do have some green. We've still got Archer Daniels Midland up almost 30% this year. Um, we have an average of 9% losses overall. 9%, the sector is down 9% since the beginning of the year. Consumer goods and services looks like a pretty even 50-50 split. We've got some strong gains with McKesson and Kraft Heinz, and we have some losses like Starbucks is down 20% and Gannett is down 23%, but average overall is only down 1%. Finance, we have a bright spot in finance in the US side. American Express is showing a gain of 9%. Overall, our finance is down 17% on the year. Resources in the US are solidly in the green. We have a 19% gain here. And utilities, we've got Alliant and Ameren are both up, but the two telephone carriers, AT&T and Verizon, are down. Verizon has just gone down. It had been showing gains every week until this past week. So our utilities average is only off minus 4%, and the entire US sector is down 6% in the year. So let's take a look at our fantasy portfolios. Our $5,000 portfolio We're still showing a gain of 4% on the year. Our total amount this week is 5,293. We are down $72 from last week, but we're still showing a gain of $210. There's been no changes in any of the dividend income. So this week, the $5,000 portfolio is still showing an annual dividend income of 187.44. Our $10,000 portfolio, we are showing a 5% gain. That is off from 7% last week, so not too bad. Our total value is $10,530. We are down $248 from last week, but we're still showing a $694 gain on the year. Our dividend income for our $10,000 portfolio, total annual dividend income is $357.66. Our $25,000 portfolio, we are showing a 3% gain. And this was our big winner last week. It was up 9% on the year. So it's dropped off to a 3% gain. So our total value of our $25,000 portfolio is $25,696. We're actually $1,153 less than last week, but we're still showing a gain of $837 on the year. Our annual dividend income for the $10,000 portfolio is holding steady at $718.52 a year. Our $100,000 portfolio, this is our only one that has taken a little bit of a loss. So we still have strong gains in resources and commodities as well as utilities, but we have dropped 1% since the beginning of the year. Back in January, we spent $98,557 to start off the year, and we are now sitting at $96,638. So we're off $3,431 from last week, and we have lost $1,919 on the year. Dividend income for the $100,000 portfolio is paying out $2,462.57 on the year. So I'm already watching the market. It's a little bit turbulent today. It's been going up and down. We're still having market sell-offs and market instability from interest rate hikes that are going on. The conflict in Russia and Ukraine is still having an effect on markets as well as oil. So, one of the things that came out today about oil is COVID-19 is causing shutdowns and lockdowns in China, and that is affecting oil and resources prices. So, the oil and gas, I should say. And oil and gas, when they get hit by the market, that can tend to cause everything else to go into a sell off. So let's see if things will turn around this week. We'll check in again next Monday with the end of this week's prices and see if we can't get a better picture. Thanks for joining me this week, and I hope to talk to you next week.